So hello, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun coming at you live here on Saturday, October the 9th. Markets are really volatile and we've got really good trading opportunities. How are you guys doing in your trades? I hope you're winning more than you're losing, right? That's the goal. We're going to cover both day and day and swing trade. Losing my voice. Sorry about that. I was doing so good there. Anyway, let's take a look at the S&P. I don't know why my voice suddenly, it's just like technology, like the computer crashes, right? My voice, been doing so much broadcasting and video recording and webinars, my voice sometimes gets a little fatigued. Anyway, let's get underway. Take two. Anyway, welcome to our live session today. I want to start off with a look at the S&P. We're still in a downtrend despite the fact we've had a few green days. The fact that we've pulled back off that 45.50 tells us we want to be bearishly inclined. Also, I wanted to say thanks to all of you who had registered for and attended the Money Show event that I did last week. Got a really big turnout, so it was popular as well. Relax my voice here for just a minute. You know, we're still in a downtrend. We're currently right between the 50 and 100 SMA. So the two things that we want to look for, there's two signals to look for next week to tell us whether or not we should be bearish or bullish. And one thing we want to look for is, do we get and stay under this 43.50, 100 simple moving average line? Another, of course, is, do we get a VIX bounce back up over the 20? We closed down, where'd the VIX close? 1877. So we're still under the 20. Remember, 20 is kind of the line in the sand for the volatility index. And so if the VIX gets back over 20, that's bearish for the market. So I want to keep an eye on that. And also, as you're taking a look at the S&P, I want to see if we either regain the 50 SMA. That's not a very particularly strong signal. See what happened last time? Now, this is what one of my colleagues refers to, well, how to say, previous support may be new resistance. So the 50 simple moving average had been support all the way up here. Now it's resistance. And one thing that I want you to make careful note of is the fact that the bulls failed to take it over the 50 simple moving average line. Now, so much of what goes on in the markets is driven by those of us who are technicians and know our stuff. And so the signals that the Wall Street crew is looking at, they're always looking at the 50, 100, and 200 simple moving average line. What I want us to do as active traders is find out how to capitalize on what happens next. So we have strength in energy and oil has been strong sectors lately. I've got a couple of curveballs here to throw at you with some new charts that you may not be aware of. So anyway, we want to see if we get over the 44.50, I would still not be swing trading unless it's maybe an energy or some of the meme stocks or whatnot. But one of the patterns that I want us to take a look at is breakouts and pivots in the current market. And one thing that we take a look at some of the stronger charts from last week. Let me know if you have any charts you'd like me to pull up, but let's take a quick look at a few here. AVTR, CMRE, METC, boom. Hey, my voice is back. That's good. In fact, let me. All right, well, hello, active traders, and welcome to our take two for our Trading Week Ahead broadcast, coming at you live here on Saturday, October the 9th, 2021. Anyway, markets are pulling back off the highs here. Obviously, the S&P lost the 50 simple moving average. The main thing that the signal to look for is the rule of three, and that's, do we have 3 days? This one you've probably not heard of before, but ask any Wall Street trader or any hedge fund guy, you'll hear. We want to see if we break and hold above resistance for a minimum of 3 days to count a trend reversal. As we all know, it's a fake out market, right? It's been up and down and up and down. What we want is some consistency. So if, see, for example, the last time the market tried to break the 50 SMA, it pulled right back. It never did hold 3 days. And the last time I tried to get under the 100 simple moving average line, didn't hold under for 3 days. So remember the 3-day rule, and that's a good advanced professional tip. And thanks for your patience as we get this party started. So before you go long in anything that you're going to hold overnight for a swing trade, make sure the underlying stock market, the S&P, has been above the minimum 50 SMA for at least 3 days or more. On the flip side, if we want to go into our inverse instruments or buy puts if you're an options trader or look for shorting the market, I want to see the market under the 100 simple moving for at least 3 days. So over the 44.50 or under the 43.50. And of course, the other signal we always look for is the VIX SIBO volatility indicator to see if we get back over the 20 for at least 3 days. So remember that 3-day rule. Now let's take a look at some charts. We have a lot of these charts that have done a run up and then a pullback. Despite what the talking heads say on financial news television, this would be a really stupid time to try and buy quality oversolds because now they're cheap. I think we still have quite a long ways to go, and we may well drop for a major correction widely expected in the middle to the latter part of October. So for that reason, fight the temptation to buy dips in an uptrend. It's probably going to do little dead cat bounce and move up slightly and then crash and go back down. Or if you do take speculative shots at some of these charts that are taking out new highs when they do, like this one, let's see, I always start much smaller size than you normally would because we're at a tipping point in the market. And I think we're on the cusp of a potential big drop. Now, if you do remember, I did correctly tell you folks back in early September, because of the 3 red candles, this is another quick visual, easy to spot strategy that I teach my traders in the live room at Trading the Open. When you have 3 red candles, remember I said the rule of 3 earlier? Well, when you see 3 red days in a row, that's usually the start of a pretty severe drop. And same thing with 3 greens on a move to the upside. It's the rule of 3. For day trading, it even holds up. I like to look for 3 green 1-minute candles for breakout in progress. We'll look at examples of that in just a minute, but we had 3 reds up here. We had a month-long drop. We do have 3 greens here, but we have a shooting star, so I wouldn't pay much heed to anything that's less than spectacular in our current markets. Now, currently oil's been really strong. So ConocoPhillips and Apache and OxyPete, OXY is the ticker, and this is one we cover in the room a lot, have been in uptrends. So when you have a strong sector like energy and oil and so forth, that may be a good place to focus because institutional traders are going there. So you want to narrow your focus. Of course, for day trading, which we're going to look at right now, we have things like our meme stocks that are strong to work with. Meaning things like AMC and GameStop and all that. Now, what's going on with this broad market? Some of the charts that we like to focus on for our live room go like this. And I focus a lot on charts that have big volatile moves, and we have a lot of smart members who thankfully are there, and they do their best to give us good charts. So as a team, we sit through the charts and we look for good trade setups. I just put together a quick video using Zoom last night on the 2-day high breakout technique, and that's basically where you're looking for a breakout 20 cents or so, 15, 20, 30 cents above the previous day's high, hard stop right underneath it, and an intraday swing strategy, which does not require hotkeys or a rapid gunfire, machine gun-like day trading. You may have, when the word day trader comes to mind, it's often, frantic trading all the time, and we do that a lot, but an alternative, especially valuable for those of you who are new to the whole idea of day trading, is what I call intraday swing trading. That's where you put on the trade in the morning, put a stop right under support, in this case right under previous day's high, and then walk away until 3:30, or at least come back, let it go to lunch before you tighten up a trailing stop on it. So it's a more leisurely, easily focused on way to do day trading without the frantic, the mental image that you may get of, clicking rapidly away and hotkeying in thousands of shares and all that. I think that's a really bad way to teach. Other people do that. I do not think that trading thousands of shares with hotkeys is in any way, shape, or form an intelligent way to teach, especially newer traders, how to do day trading. I think it's much smarter to be more leisurely. Put on a trade in the morning, sell it in the afternoon, all right? In the morning, out in the afternoon. Not frantically 5-minute hawking like a video game. So that's fun too, but your first 5 or 10 years as a day trader, maybe first 5 years, an intraday swing strategy may be more your cup of tea. Here's a good example of one that a member mentioned, plug. I think he'd mentioned it way back down there, and I said to go along there, and boom. So at least hold until the middle of the day. Let me ask a quick question. How many of you, and wow, big turnout. Thanks to all of you for being here, and thanks for your patience with me as I get all the technology squared away. We're upgrading the system, so how many of you do slower paced day trading, where the day trade, instead of 5 to 15, 20-minute classic open range breakout day trades, may be multi-hour or even all day long day trades? Show of hands, or type in yes, or thinking about it and let me know. And thanks, Mick, for that. Hey, Trey. Hey, Will. Hey, Sherry. Hey, Mira. Hey, Sandra. Hey, Don. Hey, Will. That's good to know. Well, a lot of you saying yes, 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 maybe. I like all day best. I like what you teach and how to adapt it for position trading. Thanks, yes, okay. And right, good point about the head and shoulders. Wow, a lot of comments. I'm reading all the comments. Well, thanks. Looks like a positive response. So, one thing that I want you to do is test and experiment. As any smart trader, we want to make money. We don't want to lose money. I have a happy day when I'm making money, smiley face, and not so happy when I lose money. I've had both winning and losing days routinely. And the goal, of course, is to make the cost of being wrong as small as possible. Part of that is to make a more conservative or easier step-by-step approach in your trades. And so, this intraday swings where you put on the trade in the morning, sell in the afternoon is easier than the classic, let me say, the stereotype of a day trader where it's hunting and pecking and rapid fire trades. You want to make life easy on yourself, right? So you just buy above the previous. The number one rule is that it has to be above the previous day's high, okay? And number 2 rule is the previous day's chart needs to have been in an uptrend. And that's simple, right? You can remember that. Don't buy unless it's above the previous high, and make sure that the previous day's chart looked like a stair step or 45-degree angle, or at least it closed up near the day's high. That's 2 simple things to remember. You put in your entry above the resistance and trail a stop right under support. Now, we covered those kind of intraday swing trades as well as rapid fire day trades and entry and exits. Let's see, let me show you the rack of trades yesterday. Our traders are provided, our members, our valued members, our beloved traders are provided with the answer key. And that's my clever, I came up with that. I thought it was a good idea, what I call an answer key, with specific entries for all the stocks that we're covering. And they're updated throughout the day. So this is an example of what we had yesterday, and a lot of winners in that one. Anyway, so each morning we have a list. Usually it's a short, it starts off the day as maybe 5 charts, and then members will come up when they're all excited. We got a really big community of active traders, and I'm really thankful to all of you who've helped the room grow so significantly this year. As people have gotten tired of the incomplete rooms that don't give specific entries, or the people are gunslingers that claim to make $50,000 a day, and we don't do that. We like to be much more honest and much more integrity driven and much more focused on helping our members achieve their goals by giving very specific step-by-step, easy to understand tips and strategies. So for example, I've got the live room you're in the right place at the right time. The live room is on sale. This is only the second time this year. I think June 15th was the last time. We're repeating it this winter right now. And it's on sale through tomorrow. So you do have to join by tomorrow. I'm not going to extend the deadline or anything, but you can get a whole year of the live room for just $9.97 and nothing else to buy. You don't have to buy any scanners or any special courses. I do not try and upsell into some $2,000 or $3,000 course or any of that kind of foolishness. I give you hundreds of hours of training with me personally, with a lot of really smart, bright members in my room, which is I'm very grateful to have. Plus, you get a half-hour coaching call with me on the phone and a $500 my best downloadable course, and it's half off the regular rate. So offer does end forever tomorrow, Sunday. So if you're not yet a live room member, it's just $9.97 for an entire year with me, and no extras, no upsells, no extras. You have my word. That's it. That's all you got to buy. So what a relief. Anyway, now we'll resume our regularly scheduled program. You guys hit me with your best charts. What do you want to cover? Here's one for you. Here's a gap. We call it gap and crap or gap and trap. CEI. It had been really good for everyone, including me on Thursday. Big run up, but the gap up yesterday rolled over. Now, why did it sell down? Why did it go down? More sellers than buyers. Well, why ask why? We don't care. We're price action traders. The takeaway, though, is that in general, as a rule of thumb, Mondays and Fridays, just like inside charts, are the low odds plays, kind of like playing blackjack and you keep getting 6s and 7s from the dealer. That's not good. If you get 10s and the dealer has a 6, that's good. The point is, the shoulder days, the days right before and after 3-day weekends, and Mondays and Fridays for that matter, tend to be less volatile or less tradable than the middle Tuesday, Wednesday, Thursdays. Now we meet 5 days a week, so I'm there for you guys 5 days a week. I'm there from usually 8:30 till at least 10:30 or 11 each morning. Often I'll stay around throughout the day, so we've got plenty of opportunities to identify charts. But the takeaway is, take a look for just proof. I mean, here's Freeport. This is my one of my favorite metal stocks, the Freeport-McMoRan copper. Thursday was a great day to trade this. I don't know if anyone else was trading Freeport on Thursday, but boom, we nailed it. Ching. But yesterday kind of stunk, right? Friday's not good. Thursday much better. Those are the kind of charts we like to cover. Of course, we have patterns like UVXY into the close. TZA had better relative strength. I was trading both of them yesterday and the day before. Our small cap Russell inverse is up, and we do copiously cover ETFs as well. Let me give you a couple of quick takeaways here. Let's start with the swing trading pick. Now oil's been on a run, so UCO. Remember when UCO was back at 30 bucks a share a year ago? Now it's up at 95. This sucker tripled. This is a oil exchange traded fund. One of my favorites, UCO. Now it's all the way up near 100. Now we never buy right under obvious resistance areas like 100, so this would be a good place to sell it or trail a stop if it loses, say, 87 or so. But UCO has been in quite the run, right? It had been a $30 ETF start of the year, and now it's a $90 ETF, triple your money. Gold is starting to bounce a little bit, but I'm not too excited about it. In the metal space, I think there's better, like lithium for car batteries. There's other things out there. Another strong ETF chart that may recover is a YINN, and this is a China long ETF, and this is the pattern to look for. We're all about patterns. The more money you make as a trader, the more you realize you rely upon your patterns. They're your go-to, they're your toolkit. Kind of like, does anyone remember Craftsman tools by Sears, like the 9/16" wrenches? Wonderful, they last a lifetime. As traders, our tools are the charts, our risk management, and the patterns that we're intelligent enough to know how to trade. Now, one of the things that we look for after major drops, like this YINN chart, is a 2-day reversal to the upside on some kind of volume. So this is a 2-day reversal in the China long bullish. If you want to go long China, you buy yen, right? And you can see on the daily chart, it had been up at 30 a share. Now it's way down at 10, and yet it's starting to recover on some decent volume. Now we want to see it break the moving average lines. Another one to potentially go long in is the shorting natural gas. Now natural gas has been really strong. I think the long natural gas is oil, right? Now natural gas may be a bit extended up here. It had been 20 a share on this ETF, and now it's way up at 90, or was up at 90. It's kind of consolidating up here, not sure what it wants to do. If the thinking process that you want to take as a trader is if then, if A, then B. If this, then that. If it breaks support, then I get out. If it breaks resistance, I'm in. Anyway, I would use 70 support. So if these are opposites, boil is long natural gas and cold, it's kind of clever how they come up with the names. Cold is short natural gas, which is what would happen if you run out of natural gas. It'd be pretty cold in the winter. So anyway, if boil gets under 70, especially, then cold would likely be a really good play. If we kind of zoom in on this thing, you can see we got a big green volume bar. I think that's the biggest one of the year. Buying pressure back on Wednesday. So it's not strong yet. It's still in a downtrend. But if we get back over the 12, the 18, the 28, that's where I'm going to start putting size on. I've speculated longs. I just bought a couple hundred shares. I think it was Wednesday. So relatively small size. But just like Wall Street always looks for a forecast or trade potential in terms of what happens next, this may have, when you see a high volume pivot in HVP like this, 1 year high volume, and cold says a lot of people are covering their shorts who've been short, and others like us speculators are going long. So you may want to consider buying a little cold to get in out of the cold if natural gas and its extended run up starts to fade and come back down to earth. So anyway, that's another pattern to look for. So of all the industry groups out there, energy / oil is the strongest. Now, of course, for those of you who want to fade, often make some of the biggest trades, the biggest successful, profitable trades for swing trades in fading commodities, going again after it's run all up and it's stalled and starting to come back down maybe to a third or so of where it had been up. Oftentimes that's a play. So I'm in a little bit of SCO in case oil drops. I think oil's what, 75, 77 a barrel. It's still way up there. This thing goes up when the price of crude goes down. So it's an inverse, the short crude oil, just like cold is the short natural gas. So do be aware of the inverse instruments out there, because oftentimes, especially during a market correction or a turnaround in the commodity pricing structure, you do see reversals, and oftentimes it's very easy to double your money. It's quite easy. If something was 80 a share, now it's 12 a share. Going to 24 is not that much of a stretch, right? So there might be some trade opportunities there. So anyway, let me know if there's any tickers. Yeah, it's true. Cold to play on weather. True. Too much. That's how much oil is, right? Yeah, CCXI was a good chart. It was a good day trader. Did a gap up, it pulled back, and it bounced. One thing you always want to pay attention to as an active professional day trader, at least, is pre-market chart patterns. And oftentimes they will provide you with support and resistance levels that are actionable. So for example, here you can see CCXI had technical support here at the 29, and I forgot where I called it. And this was one of my traders picks. I think it was Roger. Yeah, I said to go long at 31.6. So my traders were alerted to go long in this instrument when it was down here. I said, hey, let's go long if it breaks 31.6. And do the math. You could have made buku bucks potentially, or at least a couple of points on a bad day, right? I mean, this thing ran 31.6 to 40. This illustrates another idea, which is never buy nines. I just noticed that for the first time on this. I've published this for years and speak on it at my money show appearances, but never ever buy anything with a 9. It sell things with a 9 all day long, but never buy a 9. And you can see it stalled right under the 40. So if you're trading this, you would know to sell the 39 or at least tighten up a trailing stop. Anyway, that's where my members are alerted to go long in CCXI. Good point, trader. So the trader's asking, where can I get pre-market gap changes? Thanks. Well, in your charting software, you know, you can, I use Z-Signal. I've used Z-Signal for 20 years. It's my favorite because it's the best. I like Ninja and Metastock are good too. But I always use pre-market charts, and you can see I start my day off really early. I start looking, as the charts start to display at 6 a.m. a full 3 hours before the bell, because you know there's so many of the newer traders, especially the meme stock traders, the Robinhooders and all that do trade a lot pre-market. Now, the other sector that's strong that they're not talking about much is cryptocurrency. And so I like trading stocks. I trade Marathon, Riot, and Coinbase, but I like MARA the best. If the market goes down, people used to hedge their money by buying gold. The stock market goes up, gold goes down. That correlation is out the window now. It's a brave new world. And so we're seeing defensive plays, not only cyclicals and consumer goods and all that, but in things like our Bitcoin stocks. And you don't have to trade Bitcoin or Ethereum or any of the Bitcoin instruments, though I have a colleague or two that does, but you can trade the Bitcoin related stocks. And two of those, my two favorites are Marathon, and one that one of my traders likes to is BT. And this one has been really good for some plays lately as well. If you take a look at a multi-day chart, you can see boom, boom, flat, flat. Tuesday, Wednesday, Thursday, Friday. This is a 4-day chart, and you can see Tuesday was a rock star day. Pre-market, Wednesday was great. Thursday and Friday, both non-events, right? So you're looking to capitalize on big moves. It's helpful to know which charts provide the best trade opportunities, and that's what we do at the live room. So let me know if any other charts I can pull up. Oh, that's good. The trader saying he likes Metastock. That's how I found you. Good to know it. Yeah, Tilray. Let's see, the pot stocks starting to show some signs of life. They're kind of strong. They're hanging on last week, right? But I'm still not getting into the pot stocks just as of yet. There's my cannabis portfolio of things that I follow and or trade. I think I sold them all last week. Yeah, I cashed them all out because they weren't going anywhere. But I still like the MJ ETF. I like Canopy Growth. I like Tilray. And I like Sundial had been up for a little bit of a gap. It didn't go anywhere though, right? I called it for 72 cents. If you take a look at the chart here, that's Sundial, one of the cannabis stocks that had just gap and crap, right? Gap and trap. But hey, keep it on the radar because it's alive. That's kind of the like Frankenstein's monster. It's alive. It's got some electricity to it when it's above the previous day's high. That's where you're going to get institutional size volume. The bouncer didn't go anywhere, and we didn't see any relative strength worth a trade yet, but above the previous day's high. See how far this guy ran when it broke above, gapped up. And by the way, that's my favorite pattern, is a small gap, not a big gap, but a very small gap above the previous day's trading range. Often leads to a big explosive move to the upside. And that's why we had a really good move in Freeport. So anyhow, I think I'm going to wrap up. We're just about out of time. Let's see. There's some chart requests. Let me see what I can do here for you guys. NOG. Looks good. I like that chart. It's got buyers. Oracle, really? Okay. Yeah, actually, that was good for a $90 stock. It's out of my price range. I like stuff under $50 a share because your money can go further. You get better leverage, right? As a point of diminishing returns, things like penny stocks and OTC bulletin board stocks, usually too risky and not good. The cheap under $5 stocks, if they have enough volume, like CEI did last week, was the most active traded stock for most of last week was CEI, as in Charlie Echo Indigo on CEI. But with rare exception, you want to focus your energy on the strong charts. Let's see. Range Resources, RRC. I'm not seeing any buyers in that one. It was a good story until it wasn't. You know, typically you'd either wait for a pullback to support and play a bounce off the 18, or wait for a breakout north of 26. But usually, I don't know if your experience is like mine, but I tend to get stopped out if I trade inside ranges. That's repeatedly over tens of thousands of real money trades, millions of dollars worth the last 20 odd years. inside range charts. Trend charts are great, like this one is, but don't try and fish. What I'm trying to say is I would not be looking for a play anywhere in here. I'd instead wait for it to capitulate down to previous support level, because that will attract market technicians to tell the trading floors, hey, it may be good for a pivot, right? You know, we're like the tugboat in the front of the Wall Street ocean liners, right? We have the speed and the flexibility, but we have to have the knowledge to know what they're going to do so that they're behind our trades, or what's most likely to propel price higher. The patterns that I like to teach are those type of patterns, right? I like to teach patterns that not just speculative gamblers who are trying to trade out there do, but the professional money managers as well as our active traders. So understanding where to stay away from as well as where to get in makes a big difference in your trading success. So, all right, you guys have been great. We're out of time. I do hope that you'll want to join me at Trading Open. It's been running at 21 years. You can see hundreds of testimonials, including video testimonials. We don't try and upsell $1,000 courses, and we don't make you buy expensive add-on scanners or any of that kind of foolishness. For one low price, you get a whole year with me, if you could take it. And I hope that I can give you good intelligence tips. And we have so many smart members now. It's a real pleasure and an honor to have a teamwork, a community, if you will. A group of intelligent people that know how to fix problems in trades and identify successful entries in real time. So do give that some thought, and I'm going to get out of here momentarily. Just a quick reminder. One thing, and I often trade alongside with my traders, and I show my fidelity, I show proof my fidelity account, I show live real trades I'm in, and I have an Active Trader Pro workstation. And occasionally you see the orders flash. Only learn from people who can prove they really trade with a real money trading account, number one, which means an American account that doesn't have a demo version, like Fidelity doesn't have a demo version. So, you know, by de facto, they're live real money trades. And I do so many of them, I wouldn't have time to go Photoshop it anyway. I show live real money trades. But also, what you'll get as a member is very specific entries and live real-time tips on where to put a stop, where's the exit target, where'd be a re-entry. Let me wrap up with a quick question. One of the things that I found is critical to success as a trader is be ready to re-enter trades. If you get stopped out once or twice, give it another 2 or 3 times. Do at least maybe 3 strikes. If you get 3 stops in a row, then maybe that stock's not for you. But how many of you, show of hands, do a sequence of trades, or you'll do at least 2 trades, either swing trades or day trades? Because I think it's important, but I'm just curious, how many of you make that part? Really, I'd like to hear how many of you re-enter positions at least once or twice if you get stopped out the first time on a shake, because that's really important. In fact, what I do ahead of time, before the bell, in my Active Trader Pro workstation, and I undock it and I show people often the open orders, is that before 9:30, I'll put in 2 or 3 orders per stock that I'm considering trading. So that way, you know, to position size, every 20, 30 cents above the initial one. So that way, if I get shaken out of one, hopefully the second one will hit and run. It makes me whole, hopefully in a little money, and third one, you know, so forth. So, hey, a lot of you do. Okay, that's good to hear. Hi, Steve, saying I'm a current member. Would like to re-sign up for your current annual special if I can. Sure thing, yeah. By the way, too, any of you who are current members, and a lot of you have upgraded to annual, and thank you for that. You can purchase additional years. Just put through a couple orders, and we'll figure out the recurring payments and all that later and all that. But you know, you can purchase up to 3 years at this $1,000 you know, per year price, and we'll cancel the recurring and PayPal or whatnot so that it doesn't rebill you, and we'll figure it out. So you can book up to 3 years at the $1,000 per year, and that's half off, which is a very generous offer. It is. You get over 300 hours with me, a professional money show speaker and actual trader and educator of tens of thousands of traders worldwide. So I like to keep things fun. We like to keep things focused. We like to keep them friendly. I'm very responsive. I answer all questions to the best of my ability, and we have a lot of smart traders there too. So, and frequently some of the best charts come not from me, but from some of my members. So I got a lot of smart cookies there. So if you want to hang out with the smart kids, try this place. You have my word on it. It's a very good way to learn, and it's not trading thousands of shares of cheap stocks costing tens of thousands of dollars, and we don't upsell anything, so it's a great value. I'm a UCLA graduate, former corporate statistician for the Ford Motor Company, former adjunct faculty for a number of private universities, and I've got a very strong educational adult learning theory based background, as well as I used to run a corporate training and development company for many, many years, almost a decade. So I've got a lot of training and quantitative chops in addition to over 2 decades of full-time trading experience. So, and thanks, appreciate it, everyone. I think that's about it. Let's see, current member. Let's see, Steve only wants swing trader. I did, but I will now. Hey, thanks, Caleb. Good to have you here. Well, Will's asking about Shaq. S-H-A-K. Okay, let's see if I can fit one more in our session here. S-H-A-K. I'm not seeing any love in that chart. I wouldn't trade that with the 10-foot pole. See, I like to trade things that are going up. I mean, call me silly. Or if it's way the heck oversold, like cold, and then starts to bounce, okay. But I'm not seeing a bounce. I'm not seeing green large volume bar. I'm seeing a pattern of year-long selling in this thing. So personally, I wouldn't trade that one. That one though, I'd trade. Somebody asked about NOG. That looks great. That's a wonderful chart. That's a beautiful thing. Ain't nothing but a thing, chicken wing, or whatever. Anyway, it's ran from 15 to 26. That looks good. That one's being acquired. People are acquiring shares. It's being accumulated, not distributed. So, and do be sure to watch that Warren Buffett interview. Very intelligent man. The Oracle of Omaha, and I think their company, I think Berkshire's getting an interest in Oxy, OXY. Anyway, brilliant interview. I'm very impressed. And that takes a lot to impress me. But that's your homework assignment over the weekend, is go to YouTube and type in Warren Buffett CNBC and watch the interview with, I think it's Aaron Burnett or something like that. It's really good. Hey, good question from Greg. He's saying, is the trading room too advanced for a newbie? Not at all. I get so many new members because a lot of what other people do is too confusing or too difficult to follow or too fast. I like to break things down step by step. So if you're brand new to trading, welcome to the jungle. It's tough. Yeah, I just bought that movie with Dwayne Johnson, The Jungle Cruise. I don't know if it's good, but it looked good. I watched Riddick last night with Vin Diesel, and that was a great movie. Second time I've seen it. Anyway, I digress. The room is perfect if you're a new trader or experienced. We like to cover the reason why why it's good for newer traders is I give you specific triggers and, most importantly, very specific prices to practice with in a demo account, right? This is for compliance. I got to say it's for demo account trading only. That's up to you, but the point is you get specific entries of where to go into something before 9:30. I mean, I tell you, but before the bell, so you got plenty of time to figure out what you want to do. And I have all the triggers listed well ahead of 9:30, and then we update those and put re-entry triggers and tell you how to exit the trade. You know, if it's starting to run up to just under whole number, I say tighten up a trailing stop or exit now is fine. So yeah, it's for both newer and experienced traders. Let's see, I think that's it. I think that's all the questions. I apologize if I missed any questions. I have to scroll back up. There's so many comments. Let's see. Yeah, trader saying key to success is patterns. Another trader says almost all his tools are Craftsman, can still buy them at Lowe's and Ace. Okay, I didn't know that. Yeah, Craftsman tools are great. Like the 9/16 inch wrench, it's beautiful. I mean, it's well, and I just, you know that you made something right when, and I haven't used one in years, at least a couple of years. Built like a tank, right? They're wonderful. Nothing bad to say about Craftsman. I think someone bought them out or something. Let's see. I like to go in after the crazy open. Hey, yeah, good point from longtime trader and very smart lady who almost always gets the correct answers. Mira, She said she likes to go in right after the crazy open, and that's a good point. If you're a new trader, going back to the whole idea of new traders, you don't have to jump into the market right at 9:40 or 9:30. Frequently, you'll find that many of our best picks don't even hit till maybe 10 o'clock or even a few minutes after. So if the opening range, fast-paced 30 minutes is too hectic for you, I've got you covered, right? I give you very specific entries for more leisurely entries as well that can occur later in the morning that you don't have to frantically get into. So it's another reason to join the live room while it's on sale now this weekend. It's great. My daughter just graduated college. I'm so proud with honors and a business. I encouraged her to get a business degree because I told her it's like a key that opens up a lot more locks than, maybe a communications or French literature degree or whatnot. So anyway, she's been helping me run the business, and it's great. So I promised her I'm giving her like a 10% commission on all the orders that come through. So help her too, right? And help her with her life. So always good to have a family-based business. It's when the family's smart, right? Which she is, so that's great. She's been doing all the emails too. Good look. For the last 2 or 3 months, my daughter's been doing all the emails for the company. So that's why the new look, they look so much better than the ones I did. So it's great when you've got an offspring that can outdo you that's smarter. That's great. Anyway, you see lots of video testimonials from back when I was doing seminars in Vegas, honest, heartfelt, and hopefully I can help you folks make a transition from being frustrated and losing a lot to at least hopefully losing a lot less and starting to turn the corner and make progress. It's really good when traders make the delta, the difference before and after progress in the trade. So I still design my own websites. It took 20 years to learn how to do that. Anyway, the point is, I've got answers, you've got questions. Hopefully we can come together and work together as a team. And as an active trader community, serving traders from 36 now countries, I think we're up to. Tens of thousands of traders around the world have been customers and members over the years. I hope I can be of service to you. So sorry for being a little bit over time, but I wanted to wrap up on a positive note and give you an opportunity to work with me for a whole year with guarantee no upsells, no extras to buy, nothing like that. For $9.97, you get to work with me with our webinars 5 days a week for the entire year. So take care. Best wishes for success. Let's go get them. Markets are probably about to do at least a major dip into the end of October. So I would not be swing trading any. I'm not. I went all cash except for inverses, and I'm only in maybe $8,000 or $10,000, maybe $8,000 worth of inverses. Things that go up when the market goes down. So we'll be covering those and more in our session. So see y'all next time. Have a relaxing, peaceful weekend ahead. I'm going to try and relax a bit too. And I don't have my tenor sax here, but that's one thing I want to start bringing back is playing a little horn, some classic jazz. I'm a big fan of classic jazz, good quality music, right? So not like that modern hoo-ha. I like real music. Like Dizzy Gillespie and John Coltrane and Miles Davis and people who actually knew how to make some music. Let's make music together. Join the room. It'd be my honor to work with you, and I will see you folks hopefully Monday. So take care. Bye.